This is the macro show. This is pregame, okay? We're trying to play the game that's in front of us today. You know, leadership matters at Hedgeye. So again, being transparent, accountable, and trustworthy people. This is a game about playing and weighing probabilities. It's not about picking stocks. It's about picking the right portfolio.
Top voted question. This comes from Tim Scott. Do you expect CPI to come back hotter or lower than expected?
Yeah, so it's a good question. I kind of thought we might get this question. Celts, I don't know if we have it, but I think it's slide 9 on the quarterly themes quarterly themes deck. It's the inflationary print, the CPI or nowcast. My answer to that is really, what gets printed this week just becomes a data point. This week's numbers is just going to be, it's a number. It's important. Don't get me wrong, but I think at this point in time, what's going to get reflected out there is really how is the market going to react, right? So our nowcast model has inflation kind of cresting out around the 4% level when we get into the back half of this year. So Q2, Q3. In Q4 next year, just below 4%. So the rate of change is down. Excuse me, and that's going to continue to trend that way. So I would just really keep a keen focus on that nowcast model, and really just when that number gets reported later this week, then just sort of read and react to what the market is doing. We're certainly going to be there to guide you. And this we've said it a number of times where 2023 is really less about inflation and it's much more about earnings, recession risk rising, and that's the big one this week. I think you excuse me, you should really turn your attention this week to the earnings season and the start of that. So I called out a couple earlier in terms of CarMax. That's going to be tomorrow morning. I think that's a huge one from an auto sales component, and especially how is the consumer feeling in that, or what's the consumer expressing in that environment of the market, right? Those are bigger ticket items, and pricing has come down relatively, but at the same time they are staying kind of stickier and elevated. So I think at that same, so again, CarMax is a big one that I've got on the horizon. Delta is on Thursday. So again, how does that kind of consumer look in regards to travel, and then lastly, all the banks. So all the big, all your eyes are going to be kind of focused on the banks, and with an XLF eyeball discount of -4% and -1.2 times on a trailing 12-month Z score. Those would be kind of the bigger focus this week in my side. Again, I'm not saying inflation doesn't matter, but the pivot or the focus more on the earnings risk on the horizon and the recession on the horizon, and how that impacts both real rates, the longer end of the curve, and how does that impact your portfolio and the portfolio construction in regards to long dollar, long TLT, long EDV, long gold, right? Silver equities actually got added on Thursday in terms of the re-rank, so SIL. So again, Keith has mentioned that he's not long SI in terms of the futures, or SLV if you want to use the ETF, but we're patiently waiting for that. You can't get them all right, but platinum would be another good example. Precious metals. So again, like if you look at the commodity space, precious metals look nothing like the rest of the commodities. You had gold up 1.93% of the week, silver up 3.8%, platinum up 1.37%. So those all really looked very different than that environment. So I'd kind of pivot the question and less about what the inflation number is going to be, and more about what to anticipate in terms of how inflation staying stickier and elevated, aka around 4% for the next 3 quarters. What does that do for the Fed and what they need to accomplish?
Hey there, Hedgeye Nation, or if you're not part of Hedgeye Nation, thanks for watching Hedgeye on YouTube. If you haven't already, make sure to click on the button below there. Subscribe to our YouTube page. You can also follow the link in the description to our website to get even more great investing content.